Hi, I'm Kep Kepner CPA here in Dallas. So I have a client who at one time owned a motorhome and who drove it to the job area where he was working. He was a landman for an oil and gas company. So he would drive to New Mexico or West Texas or East Texas, wherever he was working. He would set up his office in his mobile home. That's where he would sleep at night. He would drive the mobile home to job sites or actual places where he was trying to acquire leases for his oil and gas company. And that was the way that he lived, kind of like a nomad. And that worked for him. So the question came up is that really a business expense? Well, in this particular case, I haven't had to arbitrate that or fight the IRS over it, but there was a recent case for a surgeon who bought a motorhome. He drove to the hospital and parked the motorhome in a parking lot. So what he would do is he would work in the hospital and then he would go out to his motorhome. He had it equipped to basically be able to look at x-rays, write his reports on his surgeries. So he did all kind of work in this motorhome. And then he would rest if he needed rest. So he'd take a rest and then go back in the hospital. So he claimed that 85% of that use of that motorhome was for business. The other 20% was whatever he did personally. So just to let you know, the IRS didn't buy that argument. And in fact, it went all the way to the tax court, and the tax court agreed. And they did agree to allow 20% of that mobile home to be used as business. But that meant 65% wasn't. So the surgeon had lower deductions and greater tax. So I don't know all the statistics about the use of that motorhome. I don't know what records the surgeon kept. But the reality is, had his records been really good, he might have been able to get more than 20%. So often with the IRS, it's the way that you report your documentation that determines whether you've got a reasonable case or not. So I still have some clients who use a mobile home. They're independent adjusters. They drive to other parts of the country, like for big hurricane centers. They've been down to Katrina. They've been back to New Jersey and other places where there are disasters, and they work there as an independent claims adjuster. So the question is their mobile home business? The IRS takes the position typically that driving from your home, your tax home, where you live, to a business location is commuting, even if it's 3,000 miles away. Then once you get there, as you drive around that area, that's all business. And then when you drive back home to your tax home, that's a commute back to your tax home. So your records have to disclose that and show how you computed it. I'm currently defending one of my clients who's in that business with the IRS, and we've documented. The IRS came back and said, sorry, we don't buy your argument. We said, sorry, we don't buy your argument, and we sent them more documentation, and it's now awaiting. This has been about a year trying to work with the IRS for my client who is being audited for the 2012 tax year. So when you get into a dispute with the IRS, you absolutely need to have somebody who is fighting on your behalf, because they're a big, powerful organization. And if you don't have the right documentation, they're going to stick it to you. So if you don't want it stuck to you, give us a call. We can help you.